Good evening, everyone. This is Srikanth Rajan, and welcome back to the Market Pulse video where we discuss about what happened last week and what could we expect in next week in the Indian stock market. So, talking about last week, of course, not a great week to be talking about on an investor perspective because naturally the markets were just falling down, and naturally investment portfolios of everyone who's invested in the equity has seen a small downtrend, and definitely that's not something that's giving us happiness, right? But then I'll tell you something really important which can be really happy. It's nothing but this is just an opportunity to invest as usual, and SIP mode of investment, which we kind of swear by at MPI Invest. So yes, it is a great time to invest on SIP mode, but let us try to understand what exactly happened last week. So talking about the last week, the week started off with, of course, the bearishness that continued from the US after the Federal Reserve Chairman, Mr. Jerome Powell. Jerome Powell sits in the US, talks about US situation. He was hawkish about the kind of rate hikes that's going to happen. In fact, he said that there would be one more rate hike and that would happen this year, and the rates would continue to stay higher for yet another year. Now, that was the start of the fall. Problems persist in the US, but then the global markets are reacting more. In fact, the best part is when the US markets are falling, the US bond yields are going up. So, interestingly, yes, so wherever US bond yields are going up, people start flocking to US because US dollar is considered one of the most powerful currency in the world. So anybody who is going to get, at this point of time, the interest rates in the US bonds are going up around 5.5%. So 5.5% dollar terms could mean around 7 to 8% returns in INR terms. INR means Indian rupee. So that is a good return, right? 8% return on USD, fixed return. So that is the time when people actually think of flocking to US. Problems are in US. US dollar is still stronger. Hence, people still go invest in the US, putting other developing markets like India and other developing countries into trouble. So that's exactly what's happening last week. So we could see the FIAs on continuous selling mode, and they have been pulling out funds from India, and that has actually led the market lower. In fact, if you see the previous weeks also, we have been discussing this very importantly, that the markets in India have not gone up because of FIA money this time. It was purely DIA play and retailers play, which is nothing but the funds that are coming from the retailers in India, which is actually taking the market up. And at this point of time, the markets are looking really costly for the FIAs who have missed this opportunity to take this bull run. But then, of course, all their old investments is what they can pull the fund off. Apart from that, of course, there is growing tension among Canada and India. You know the reason. I don't have to talk about it. But then there is a fear in the market. Will the Canadian Pension Fund, which of course is one of the biggest FIIs in India, will they pull out funds from India? And if that happens, what could happen to the market? So a lot of people are talking about it, but I thought probably I'll just put my view on this. See, yes, a Canadian Pension Fund is originating from Canada, but does not mean the fund belongs to the government. It is not the government money. It is the people who have invested in the pension fund. So it is the people's money. Now, I don't think a fund manager could take a call because of a national issue on the funds that is invested there. They cannot take a risk on the investor's return. When they invest into such a good market like India, which is going to see amazing opportunity in the upcoming years, will they actually take a risk with investors' money? So that is kind of something which I don't think can happen, which I don't see practical. So let's not kind of much worry about it, is what I feel. But then at this point of correction, do we really have to worry? But I would just say Indian markets are still strong. If you just look at the income tax data that has come, it is in fact the tax collection in India has gone up. In fact, I was surprised today. I very rarely do cash transactions, so I had to pull out some funds from my ATM, and I was charged TCS on my bank as ATM withdrawal. I was really shocked. I still don't know. Let me go clarify that with the bank. Is that so big that TCS has to be collected on cash withdrawals also? Of course, it's surprising to me. I need to clarify that. But then yes, if such collections are happening, Indian government is really strong. They have a lot of money. So, of course, there are some uncertainties around India because of the elections coming up. But then Those are all small term issues that we need not bother. Now, the big question comes here, that is what is written in the title, that is, will the markets fall further? Now, talking about US markets, I have no comments already. They have actually fallen really big. The entire last week they have been falling. In fact, Nasdaq has fallen by almost 4%. So I don't see a reason why they should be falling further, because all those problems must have actually, been taken care of. I will have to take this important call, so I'll just put on pause for a minute. Apologies, it was a very important call, I couldn't miss that. Okay, so so we were talking about US markets, I guess. Okay, I probably lost track. Sorry. So coming back to the market. So US markets are in trouble. Indian markets are really looking strong. The tax collection is really strong. That's what I was talking about. So with all that, Indian markets can see a further up move in the coming years. I'm talking about, yes, long term. Short term, nothing can be predicted. Short term, we can only talk about important levels at this point of time. But apart from that, if you look at the market over long term, this is a great time to be going on SIP mode of investment. So be that be in a mutual fund or any equity related product, it could be AF, IAP, or even your stock basket if you're having a stock portfolio. But then I always recommend go with a recommendation of a research analyst, because that could give better returns, because unless you are focused on the market 24 hours, unless you are updated with the market, you may not be able to generate a return. In fact, the simple thing I would tell you is, all those people who are doing self investment into the stock market, what returns have you generated in the last 4 or 5 years? So if your returns are less than 20%, I would suggest don't take the headache, just give it to an expert, let them handle it. Because even if the expert is able to give you about 15 to 16% return, then it's amazing, because you don't have a single headache there, and you can focus on something else to generate more money and income that can actually help you with building your investment than spending your time on analyzing stocks and markets. So this is something I would advise. Of course, we are working on few videos, knowledge series. The work is still on. We should be able to bring it out soon. Hopefully that would be really helpful to all of you. So apart from that, if you look at next week, there are no much events. It's naturally the last expiry of this month, so markets are going to be volatile this week. Big movements can be expected. Along with that, there are also few Federal Reserve members speaking in the US, and also I think on Friday we have Jerome Powell himself speaking again, so that will be watched. And apart from that, there is the GDP data of US coming on Friday. Apart from that, in India, there's nothing major to be looking at. Of course, HDFC Bank and Reliance are at a weak level, so that could be watched, because any further fall in HDFC Bank could be triggering towards bearish sign. But then at this point of time, HDFC Bank is actually at a very important support. So I am telling you, 1500 to 1550 is a very important support for HDFC Bank, and if at all it breaks that on the downside, I would be looking at adding probably in SIP mode into HDFC Bank, though I have a good investment in HDFC Bank. Because I have a long-term view. My long-term view is really positive on HDFC Bank. Well, I would not recommend you to invest directly. Take your financial advisor's support before investing. So that's it for now. Coming to next week levels, I am expecting the market to be expiring between 19,400 and 20,000. So that is the expectation for now. Let's see how the market moves. And if any changes, of course, I would be telling it in the daily podcast that we do. So that's it for now. Let me see if we have any questions. Any questions related to your investments, you can always post it here. And of course, we can answer your questions. Apart from that, any thing else we can of course discuss over the next week's podcast. So wishing you all a great week ahead, but do remember to invest in a SIP mode for your long term investments. Goodbye, have a great week ahead.